This video and all other videos on this channel for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel, and I want to kick things off today by talking about this announcement I was speculating on Tuesday. Then I've got kind of a random selection of things to show you. Some of them will be on trend or on brand or on theme for this channel, and some of them are kind of just slightly different, but I thought they'd make an interesting idea to talk about. And then what I want to do is look through some charts and check on the live positions, see where we are in the cycles, and see if the Bitcoin count has developed anymore since I was last here with you guys. So on Tuesday, I was talking about how we were allegedly going to see this kind of major speech, and I was pointing at this and saying, ordinarily, I would be saying things like, ignore it, right? It's a nothing burger, they're always a nothing burger, and like, we never care, and cycles are in control, and all of this kind of thing. But given that this time around we were late stage cycle, I was suggesting that it may or may not be of more significance just based on where we are in the 4-year cycle, right? So I was saying ordinarily we wouldn't care, but just because we are in the kind of banana zone portion of the 4-year cycle, then maybe we should care this time around. However, I think it's safe to say by now it was indeed another nothing burger, and the best we could really get was the escalator stopped working, and so did the teleprompter. Maybe by sheer coincidence, maybe not. As always, I don't care, right? I don't have a stance on this kind of thing. So I think we can just point at this and say something else is going to have to catalyze the banana zone. It clearly was not that. Now, apparently there is some kind of talk from the same guy on the 1st of October about potentially changing the tax laws around crypto. So maybe that could be it, and maybe that can be the thing that kind of forces people to pump this thing into the grand finale and the final move to the top. Or maybe that'll be another nothing burger too. I do think from a cycle perspective, we are currently shaping up to have a decline into that early October timeframe, which would be Bob's count being correct, and that would also sync up with the stock market's weekly cycle low. Something that's of note though is we've got the Camel Finance indicator picking this as a weekly cycle low now, which actually suggests to me that it has detected some underlying momentum that it thinks will prevent us from making a new lower low. Now, it can change its mind if price action proves it wrong, right? Just like how if we get a new lower low, I'm going to move my manual count to accept Bob Loukas' count for the early October low. The indicator can do the same thing, right? If the market proves to it that it's got another low left in it, then it can go and repaint that as the weekly cycle low. But typically speaking, I would not expect it to pick a weekly cycle low here unless it thought there was a very good chance that the market has indeed bottomed here. So that's quite interesting. Maybe this is just going to be a higher low and then we break out. As I was saying on Tuesday's episode, it's a trendline break of this downward slope in red that I think will confirm we are well on our way to new highs. And that is supported by Big Mike's Bitcoin main count here, okay, that we've done 1 into 2 and then we're going to move off higher. So the indicator seems to support this. Where is it? I'm on the wrong one. Here you go. The indicator seems to support this as well. So let's see what can happen from here. I don't think it matters as always, because worst case scenario, we get a slightly lower low into early October and then we repaint the weekly cycle low. We confirm it with a trendline break and it's off to the moon anyway. And of course, the reason I say off to the moon is we are late stage cycle, right? There's only about a month left of this bull phase of the 4-year cycle before we reach the time frame for 35 months, which is how the historic bull markets have topped. Bob Loukas put out a video yesterday with his update for the 4-year cycle look, and he said he's essentially leaning on a month 35 to 37 top, so that's anywhere between October and about December for the 4-year cycle to top, and then head down for that 4-year cycle low. He said he gave it about a 10% chance that the top is already in, and he also outlined another scenario where we could perhaps creep into Q1, but he said for that to be on the table, we'd have to have no kind of vertical blow off top price action. So we're going to find out soon enough, right? We just got to keep taking it one day at a time. But unless we get a new lower low, unless the Camel Finance indicator repaints this low, which it won't do, remember, unless this low is violated down below 107k. The bottom is in, okay, and a breakout is imminent, and that means new highs should be coming just around the corner. Meanwhile, we've got quite a big divergence here from the global M2 and Bitcoin's price. So is there a catch-up trade? Right? Or is this thing just kind of broken like we long suspected it might be? I don't think it matters, because I think ultimately the cycles are pointing up for Bitcoin in the not too distant future. As you can see, I'm still quite bullish, even though we have probably got to wiggle out a few more days of chop and volatility, and I am still open to one final lower low, but I don't really think it's going to make a difference, as I've said a million times. I found this and I thought this was an interesting take, that's why I wanted to cover this, which is where will the liquidity come from to fuel alt season? And here's a potential answer, right? These Mag 7 type stocks. But when I saw this, I thought this was quite strange, right? Because to me, this doesn't make any sense at all, right? If you're a very rich person that has bought down here and invested your time into holding, and you've got spectacular gains and you've made tens of millions of dollars here, the last thing you're going to do here is disrespect your own capital, your own time, your family's inheritance by saying, yeah, I've waited all this time, I've finally made this huge amount of money, I know what to do with it, time to rotate it into highly speculative altcoins, right? That's not how that's not how rich people think. Rich people say, I'm definitely going to lock this down. I'm definitely going to spread the risk out, diversify it, buy cash flow generating businesses, probably buy some property that at least will hold its value, right? Or rental property, so I've got some form of income. No person that has invested all this time, years of their life, waiting for the investment to bear fruit, is going to disrespect their own time and their own capital by moving this into highly speculative assets, right? The more money you make as a rich person, the less speculative you tend to go. People that have made tens of millions of dollars here are not saying to themselves, which one of the top 300 alts am I going to buy? No. They're saying, time to probably buy some bonds, right? Because we know the rates are on the way down, which means the bond prices are going to go up. We also know that printing is coming in 2026, probably late 2026. And the primary form of QE is to print money and buy bonds, which of course will push the bond prices up and the yields down even further, right? So this is how rich people think. They do not think, oh, I know how I'm going to reward myself for the past 6 or 7 years of sitting through this, right? I'm going to put it in a highly speculative asset, right? Like, there's such a brokey way of thinking. So I just wanted you to kind of put yourselves in the shoes of somebody that has made tens of millions of dollars on this trade, right? And then ask yourself, is the logical thing to do here to rotate it into highly speculative assets? I don't think so, to be honest. Now, that does not mean that we can't get alt season pumps. It doesn't mean that a handful of alts couldn't do extremely well. But I'm just saying, if you think that this rotation into altcoins is going to catalyze alt season, I think you're sorely mistaken. And this market is getting extraordinarily interesting to me. It seems to be validating my idea of the blow off top, global bear market and recession, bit of asset price deflation next year, more and more each day. And I saw this from champion stock trader Mark Minervini, and it kind of aligns with what I've been saying. He says the market's starting to feel like early 1999, right before that dot-com bubble blow off top, and of course the dot-com bubble burst, the global recession, the bear market that ensued. He says where indexes ran up on fewer and fewer names, right? Breadth typically narrows into the top, and of course 99 saw one of the biggest rallies in history on the Nasdaqs, and then it wasn't so pretty afterwards. Historically, he tends to get cautious early, and his hope is that we get rotation into areas that have underperformed, like small and mid caps, and then the bull market will be able to extend. But as always, he expects the best and plans for the worst, which again is something I obviously do on this channel a lot. Open to bear markets and recessions whilst remaining long and strong until it becomes unreasonable to do so. One thing is for sure, okay? Mark's stops are going to force him into cash early enough to avoid any real damage. In 40 years, he's never been caught as a bag holder in any of the 9 bear markets that he's lived through, which is a real feat of accomplishment if you really think about it. But this is why it's so important to have your system that takes you out, whether it's trend lines like mine or stop losses like Mark's, and be open to the downside. Okay, it's just not going to fly to sit here and say we're early stages and you don't care about managing risk, right? When the market starts to turn and change direction, you've got to be willing to get out of the way of it, sidestep the drawdown, and then wait for the market to prove itself to you if it wants to continue higher, right? There's no such thing as missing out on upside in these games, okay? There's really just protecting against downside, and then there is getting back in when the market has proved itself to you. But note the theme here, okay? We're in a blow off top, starting to go completely vertical, starting to feel a lot like the dot-com bubble. Breadth is narrowing out, and so far there's very little sign of wide and broad-based participation or even this rotation that a lot of traders are calling for. I saw a tweet from Blockchain Backer today, and he's been one of the biggest kind of proponents of breadth widening into this top, and we're getting the alt season that he's been talking about and needing the Russell 2K to move into what he calls price expansion so that therefore alt season can happen. But today he posted a tweet to say he sold a third of all of his holdings because he's not convinced that that's going to happen, right? And this is very typical. This is what we typically tend to see. We tend to see a bunch of narrowing into the tops, and that's exactly what we've got today. Half Finance waking up behind me. Wife, please deal with this. Are you all right? Do you want a hand? Okay, what were we saying? I think we were ranting about the dot-com bubble burst. I'll teach you about that in a few years. So, I wonder how much of this I'm going to leave in. There's zero alpha here, but I think some people will find it funny. I don't know what I was saying. This is dad life for you, I guess. Most of you probably well aware of how this goes by now. I think what we were saying is we're going vertical, right? The stock market is blowing off. It's starting to feel a lot like a bubble. We're starting to get more and more narrowing, which is never really a good sign because historically we do narrow into tops. And I guess what we're saying is what we always say, And that is, let's just be cautious, right? We can be long and strong, we can keep pushing the trades, but when breakdowns eventually show up, it is going to be time to kind of take some action, sit on the sides, and see what happens going forward. And it's not just me that's saying that. I think that was another one of my points here. This is also coming from Mark Minervini, okay, a champion, world champion stock trader. And his opinion carries a lot more weight than mine does, let's be honest. Now, speaking of this whole kind of blow off top bear market, okay, as I'm sure you guys are well aware, if we pull up this SPY chart of mine that we lovingly refer to as the melt up chart on this channel, the eagle-eyed viewers will know there's been this pink text here, right? Where we're calling for this thing to break down. The market will finally bottom when the Fed launches its record QE. That's out of the late 2026 4-year cycle low that we expect that. Here's the key part though, the bounce will form a lower high because we're calling for a lost decade, stagflation and that kind of thing. And so I first want to draw your attention to these analogs here for the Dow Jones, because some of these look quite promising, right? Some of these look like we can have a little bit of a pullback and continue on for a while longer. Some of them, again, fitting in with this theme. Some of them say we're just going to go up in range for a while. Some of them say that this market's got legs for a long time to come. Now, I've been making the case, it's probably this 1965 one, where we get this kind of final grand finale, a blow off top, and then a bear market, and then a lost decade thereafter. It's kind of silly almost to say that this one should carry any more weight than the rest of them. They're all just fractals, right? And this is the biggest problem with fractals, is we tend to, as investors, find the one that fits our own bias the best. So for me, that is this 65 one. And then we kind of just reject and ignore all of the other analogs, right? But it could be any one of these. That's absolutely true. And it could be none of them too. We could deviate away from every single one of them. If my call is correct and all of that stuff from the melt up chart is true, then it is the 1965 one that is going to play out. And if we zoom into what happened back there, you'll notice that it topped in January of 66, which would be equivalent to topping next year, of course. And then we remained range bound until 83. Now, most people will say this is impossible because they think that printing always resolves to new highs. But I see no new highs after this blow off top. And I think the printing is going to cause stagflation and a lost decade instead. And also, of course, this massive range will finally return the valuations that are sky high at the moment to a reasonable level. You've got things like PLTR trading at 600 and something PE. I mean, this is ridiculous. This is absolutely nonsense. And I think we do need a whopping great mean reversion, as I've been saying for a while. So here's what happened back then if that 1965 fractal repeats, right? We're right about here at the moment. We've got a couple of months of upside left, perhaps, into the end of this year or Q1 of next year. Then we get the bear market decline 4-year cycle low. But notice what happens thereafter, right? 1, 2, 3, 4 4-year cycle lows. A massive range here, and we don't get the breakout until January of 1983, okay, before we can finally return to the upside. Now, a lot of people were saying, you know, this seems ridiculous, Camel. How can you be calling for about 16 odd years of range? And the answer is, I'm not really calling for 16 years of range because the printing does speed things up, right? The fiscal response to these kind of crises is sped up each time. So I do think we could probably get this done in about half the time, maybe a 7-year range. And there's more to this 7-year idea than you might think at first, right? Because you can see what I mean when I say that they are speeding up in response to these kind of crises, right? The first time it happens, 13 years of this range, right? Then 11 years, then 9 years. So is the upcoming one just going to be 7? It's quite possible, right? And again, because a lot of printing takes place, each printing is exponentially bigger than the last round. And so there's a debasement component to all of this, whereby we get asset prices seemingly rally, but it's really just that the currency is being debased and devalued against it, and therefore it takes more units of currency to buy the same assets. I'll leave you to go through the maths here. You can pause your screen and take a good look at this. But something like this would make total sense to me, right? We get this kind of lost decade, 7 years of sideways, 7 years nowhere near as bad as what we've had in previous history. But it does mean that the buy and hold investor is not going to do very well during this environment. This is going to be environment much better suited to traders, especially those with a cycle trading knowledge. And finally, what does that mean if you don't want to trade stocks, right? What if I'm correct? What if we are going to have a lost decade and you don't want to be a trader that's in and out and trading the cycles? What can we buy instead? Well, if I am right about this idea and the stock market is going to range, and I'm also right about the enormous amount of printing that's going to take place, then I expect hard assets, Bitcoin, gold, silver, other commodities to experience a huge boom, again, as part of that debasement trade. Shout out TG23 here, who has created a very nice illustration based on my base case, which is that we're somewhere in this neighborhood undergoing the final blow off top. then we'll get a whopping great correction into the 4-year cycle low, or the half cycle in the 8-year cycle, and then a good moonshot thereafter, and it's up in this neighborhood where I'm calling for them to do the gold reval and fix some of the debt issues and that kind of thing, do some jiggery pokery with the book balancing. So we'll see. I know a lot of people don't really believe this is possible at the moment, but I think a lot of people are going to be surprised. Let's be honest, if I'm even half right about this, then, you know, no one's going to be complaining with a big 30 or 40% pullback in gold, followed by a multiple 100% rally up to 8, 9, 10k. And if I am right, then this is one of the trades of our generation. So super exciting times. For now, this was the call from all the way back here at the 8-year cycle low. And so far, I mean, it's played out. A lot of people said this was a joke, right? A lot of people really didn't think this was possible, but we've gotten all the way from the 8-year cycle low to here now, okay? And it's still very much on track. So I like what I'm seeing here. As always, open to being proven wrong. If the stock market wants to keep rallying to new highs instead of go sideways for 7+ years, then I'm down for that. I would much rather that, make my life a lot easier. And if this thing is not going to rally spectacularly like I think it is, then fine, we'll find something else to trade, right? But for now, all of this stuff is continuing to play out, so we're going to continue to stick with it. And so just as a quick recap, right? Interesting that the camel indicator has picked the low, but it's not fully cemented, because if we have a new lower low, then we have to accept Bob's count, and of course this will then repaint the low just underneath it. But for now at least, it would not have fired a weekly cycle low here if it didn't think we had a very good chance of breaking out. So that's pretty interesting. It's another one of these times where we get to point at this and say we weren't expecting that, okay? But when we're not expecting something from the indicator and it does it anyway, it's always time to sit up in our seats and pay attention. That's one of the most powerful tools that this indicator offers, right? It can see things that we cannot, because it uses 90 settings, so it can detect momentum in ways that we simply cannot see. Gold, as I said, continuing to push, right? It's well on its way now for this big blow off top moment, happy days, and we're still pushing those miners and mining stocks, right? They're not breaking down from 4th angles just yet. Some of them even look like they want 5th angles to be set. I think Newmont was one of these. Almost looks like it's thinking about a 5th angle here. So continuing to push those, and notice how silver is finally getting moving towards that $50 plus target, okay? Happy days there. The stock market, as we know, having a little bit of a pullback. I think the top should hopefully be in for this daily and weekly cycle, and then we can get a nice big flush, hopefully, load the boat here, and then it should be that final kind of dot-com bubble moment, right? Vertical into the top, and then look to lock down all the gains before Christmas and get out of the way, right? Worst case scenario, we get a whopping great correction, momentum proves itself just like it did back here after the tariff tantrum, and we get back in, right? And best case scenario, well, we sold the top and we're out in cash, ready to take advantage of whatever comes over the next year. And so that's it from me. I hope you're all doing well in life. I hope you're having a fantastic week. And until next time, take care from me. All the best. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel